with the blessings of our guide and mentor, Pukale sir, we begin this today's program, and we have with us an eminent speaker, Mr. Sudarshan Pukale, who has basically accepted our small invitation and has made his time to attend this particular seminar and guide us through how to become financially independent. I'll just read out a short on this. It's a very wide and very elaborate profile Mr. Sudarshan having. He is a certified CA and a practicing CA. Right? He has many qualifications to his credit. He has now been pursuing PhD. He has done a lot of certifications from ICI, that is Institute of Chartered Accountants, in the areas of concurrent audit, wealth management and financial planning, business responsibility, sustainability, reporting, MSME and startup, and also in CSR, which is very relevant in today's. He has many recognitions and rewards to his credit. He is one of among the 10 top Indians for the year 22-23 of influential persons, a very rare achievement, I would say. And he has been awarded a global award in most influential trainer. That's also one of the rarest of the opportunity, and which has been basically under the Global Excellence Council Canada. He has achieved India's Achievers Award 2021 by Indian Achievers Forum. He has a very proficiency in teaching also. Similarly, in one of the, he has guided and he teaches students from CA, CS, ICWA, MBAs, and all of the students who seek his guidance. Participating and people pursuing IMM also has been his core area. He, in training and development, he has enriched almost more than 750 programs and told almost an audience of 55,000 plus. That's a great exposure, I would say. He is a versatile speaker, conducts program at various ranges of his. He has a very good corporate clients to his career also. HDFC Bank, IDFC Bank, Kotak Mutual Fund, SBI Mutual Fund, Star Insurance, Max Life Insurance, Saraswat Cooperative Bank, and MSME training development programs. He has guided various people across all sections of into a businessman, employed professional, doctors, corporate employees, students at large. And one of the surprises, he writes books also. He has written an international book titled Great Success Formula, which has been acclaimed by many. Balancing between both spiritual success and materialistic.
So his profile is so large that I think one day is also not enough to,
This book, what we were talking about, Great Success Formula, this book has been in fact acknowledged by PM office also.
Yes, yes.
So I think
we
get to know more about him.
Also. Yes, they are not missing. And now presently he is with IMM Mumbai on a research program. So with all this, we are all eager to hear Mr. Sudarshan. I welcome you, sir. Please. Once again, thank you for accepting our invitation,
Sir,
Please.
sir, please welcome him with the tulsi plant.
Sir, आप भी जाइए. You also bring
Yes,
this
please,
photograph
sure.
to me.
I'll come. 1 minute.
So, one chartered accountant, we are lucky to have such a distinguished institution. Please, Ashok Samaya. You must give credit to those saying.
Sir, the stand
Here for our small institution.
Sir, may I please request all of you to please stand near the standee?
Yeah, sure.
Sir, सर दिखने चाहिए.
बस.
सुदर्शन थोड़ा इधर लाइट के इस तरफ. नहीं
That's fine, that's fine, that's fine.
हाँ, हाँ.
ऐसा नहीं होगा.
हाँ sir, हाँ it's okay, it's okay, it's okay.
अभी
हाँ, ठीक.
Yes sir.
Thank you.
Thank you.
Thank you, sir. Please.
Although I couldn't meet him personally during my lifetime, but whatever I have heard about him through Sureka Chandra Madam or Anuraga Chandra, I was very much keen to meet him, but nonetheless, at least now today, by virtue of this event, I am here and I am really glad to be present over here. And at the outset, I would like to express my sincere gratitude to Anuraga Chandra Madam, Sureka Chandra Madam, for giving me an opportunity to speak in front of this office gathering. Thank you very much. So let us begin with
This is will not come in the recording. Where's my?
to cover the title of the program is Arthik Rupena Sakshama. How to become financially
Your
competent.
phone is there in your pocket?
How to become financially competent as such.
Okay.
Competency. What do you mean by competency as such?
Ability to do something.
Yes. Ability to do something. Skills, knowledge, techniques, whatever we have learned. So today we will be seeing three things. We will just have a brief introduction about financial competency.
The 2 minutes we can switch off.
Also, we can take care of financial competency principles. We will be going through financial competency principles. And we will take a financial competence assessment test so that we will be able to find where we are standing. Okay. That will be the key takeaway. Fine.
Yes.
So, financial
Don't switch
competence.
off. Sir, all the lights don't need to be switched off. एक लाइट ऑन रखी सर please.
इधर का लाइट ऑफ.
So financial competence refers to a person's ability to effectively manage and understand their financial resources. It includes having knowledge, skills, and confidence. Do we have knowledge? Do we have skills? And also the confidence to take financial decisions. Because every now and then you will take any particular decision, more or less 99% of our decisions are pertaining to directly or indirectly finance. So we ought to have that much amount of financial competence with us. So the big question, let me ask you the big question, and I want everyone to participate. Suppose you go to Kaun Banega Crorepati and win 10 lakh rupees. What you will do of those 10 lakh rupees? I repeat my question. You go to Kaun Banega Crorepati and you have won 10 lakh rupees. I'll give you a couple of seconds to think what you will do of those 10 lakh rupees. Fine? Got my question?
Yeah.
Fine. Sir.
I would like to make the accounting how I became crorepati out of 10 lakhs.
Okay, so you will be investing as such to compound the money.
Yeah, money.
Great. Great. Yes, ma'am.
Invest so that I'm financially independent.
Sorry, I didn't get invest. Okay,
Invest.
invest. Great. Yes, ma'am.
I read it somewhere that some percent of your finances has to be distributed in such a way that whatever percentage has to go to charity, something has to go in your investment. I need to understand more. That's why I'm here.
Okay.
So I hope.
Fine. So you are not sure exactly what you are going to do.
No,
Suppose you win. Suppose you win.
Yeah.
Madam, 10 lakh rupees. What do you do?
Definitely, I will invest. Definitely, I will invest.
Okay.
And I want to be an entrepreneur. That's been my dream. So
So you will be
probably I
starting up your business.
Yeah,
You will be
yeah.
investing in your business.
Yes.
Fine. Great. Sir.
Part of it, as Anu said, I'll be putting to charity.
Okay.
Part of it for my enjoyment first.
Okay.
Because every time we need to have some enjoyment also.
Exactly.
And since yet we are not financially independent, correct? So at least that will give me some moment that I can enjoy an investment in that also.
Correct.
Fine, that may increase my enthusiasm for further things, how to recreate money out of that money which is available.
Right.
So I'll try to do that.
Right.
And part of it I will invest it
Right.
into somewhere where this can be used for later purpose.
Correct.
Maybe it's emergency or whatever it is.
Right.
So some part I invest in such a way that it will increase that, like it's a seed and which will grow like a tree.
Exactly.
Something like that.
Great, sir. Great. Thank you. Sir, what do you do?
To before participating, I will rather put a question to myself whether why do you want to participate? What is my purpose of going to Kolkata? To check my ability, to check my knowledge, or to understand or to meet Amitabh Bachchan. Or the partner source to earn money.
Yes.
So that goal has to be clear in my mind before I go there.
Right.
Suppose if any of these goals are there, the money doesn't become irrelevant.
Correct.
Suppose if I go with the goal that I want to earn the money,
Right.
then the second question comes to my mind, what will I do with my money?
Correct.
So my purpose is not that money. My purpose will be for others.
Okay.
So I want to go and check my ability.
Okay.
I want to check my knowledge.
Okay.
I want to enjoy the environment. Money doesn't matter to me.
Okay.
Okay, that would be my goal.
So I will just change a little bit my question. Suppose you win 10 lakh rupees lottery, what you will do?
Spend on social.
Social. So you would be doing charity.
Absolutely.
Fine. Great, sir. Yes.
10 lakhs or 7 lakhs. That is what I'll have to say. At the end of the day, net check what I'm going to get.
10 lakhs. Sir.
After
Net check
10
10
lakhs.
lakhs. Net check 10 lakhs.
13.
After
Net of
30%. So what you will do?
Some part reinvest in the business,
Okay.
in our business, and some part will be go in charity, and as he said, some part will be for celebration.
Great. Great. Sir. Yes, sir. What you will
Ashok
do?
sir.
Yeah, I think you should have addressed this question to people in different age groups, because in that case you will get a little more information which is diverse.
Correct.
For instance, I am a pensioner,
Right.
and I would very confidently say that most of my liabilities are over.
Right.
In which case, I don't see much of a reason why I should worry about keeping aside some money for something,
Right.
because there is no something there.
Right.
And as of now, I think I'll probably put it in investments like mutual funds,
Right.
because over a period of 10 years, now I understood how to invest.
Okay.
Yeah, so on that basis, I think I'll do that.
Great. Great. Sir. Good. Madam, just one. What you will do of those 10 lakhs, please,
I would definitely invest in my venture.
in your business venture?
Yes, the entire money.
Fine. Thank you very much.
Thank you.
So
Sir,
there's another
if,
thing.
yes, ma'am.
Some more, quite a few of us are into the senior citizen category.
Right.
So we don't know how long we'll live now. So why invest? Let's enjoy.
Welcome, sir.
Absolutely.
If you go to Kaun Banega Crorepati and win 10 lakh rupees, what you will do of those 10 lakh rupees?
I will do a startup.
You will start your business, invest in your startup business. Great.
Already done.
I highly appreciate for your participation, and we should clap for ourselves because very good participation is there. Now, if you carefully see, question of 10 lakh rupees was same for all. Answers were different. What does this signify?
Each person has different wants and
Yes.
perceptions, different
priorities.
wants, priorities, needs.
It signifies two aspects. Exactly. First thing is, how do we view money? What is our approach towards money?
Sir, may I
Yes.
listen to your question once again?
Sudarshan Pukale.
What does it specifies? I mean, question was same to all, answers were differing. What does this specify? It specifies two things. Number one, how do we view money? What is our approach towards money? Okay. Now, if any particular person says that if I get some money, I would be spending, certainly we can say that that person's perspective is he or she views money as a spending medium of spending, right? If another person says, I will save money, then we can say, okay, this person is having a view towards money that this is a medium of saving.
Rear camera, that's right.
Another person might say, I will invest money. Different answers have come, right? Or we can say we can do some permutation combination of these three things. Whenever we are having money, we can do either of the three things or combination of three things. Either we will be spending some portion, saving some portion, investing some portion. These, other than these three, there is no other alternative as such, right? However, the proportion of saving or spending or investing Out of the yes,
What
ma'am.
is the difference between saving and investing here?
I'm going to come back. I'm going to bring it. The piggy bank which we used to have in our school,
Saving.
that is saving. That is not investing.
Okay.
I'm going to come. Okay. So we are having three different proportions. Now the proportion of saving or spending or investing differs from person to person because that person is having different approach towards money. Right? Second perspective what we can see is priorities. Every person's priorities are different. As rightly you have said, some are pensioners, some are earning people, some might be in their early stage of career, mid stage of their career, end stage of their career. Different people are having different age group is there. According to the age group, the priorities change. Right? And as per the priorities, we are going to take financial decisions based on that. No person's financial decisions will be same irrespective of whether that two people are having same income. Suppose X and Y are having same income, suppose 1 lakh rupees per month. Still, they would be using the money in a different manner. For example, Mr. X is having Miss X, who is his sister, who is wholly and solely dependent on him. In case of Y, that is, dependency is not there. So certain amount of money would be going for that particular reason as such. So priorities are different at different life stages. But fundamental thing is what is our approach towards money. And looking at that, when we say that if I earn 10 lakh rupees, maximum portion, if not all, maximum portion I am going to spend, then we can say that yes, this person is a spender. And we can certainly say this person's financial future is not bright. That's for sure. Why? Spending money today. What about future? Yeah, as against that, suppose another person says, I will save major portion of money and I will spend a little bit of money. We can say yes, this person's financial future is bright. Because that fellow is preparing for his financial future. Right? So how we see money is the fundamental thing, how we use money. Every person's perspective is different and priorities are different. And these are the two determinant factors of how we are going to use the money. And that was what I wanted to convey through this message. Now you are warmed up because you have participated. Now you are warmed up, now you are geared up, now you are ready for the session. Okay, so the question was, what do we do with our money? And as I have used some kind of Sanskrit words, either we can save, or we can spend, or we can invest. Three options are there. Save, bachatam. Spend, VSC, or nivesham. Okay, so coming to your question, madam, saving, whatever money we save out of our income, unless and until we put it into a particular investment avenue, that cannot be converted into investment. So long as we are having cash in hand, in our purse or in our pocket, that is saving, whatever money we have saved. But once we invest in a bank deposit, or in mutual fund, or in stock, or in property, that becomes investment. Right? So either of these three combinations we are doing, right? And the proportion of which is higher, that is going to determine our financial future. Isn't it? But initially, if we see in our initial part of our career, major portion of money is going in spending. That's for sure, right? So what is the principle? Financial competence principle, one of the eminent person in finance, Warren Buffett. What is he saying? Do not save what is left after spending, but spend what is left after saving. Now if you carefully see this quote, okay, you can figure it out a particular formula. You can convert this quote into a formula. And if you want, you can note it down in a notepad, mobile notepad or whatever, so that this would be very effective as such. And predominantly 90 to 95% of the people are following first part of the quote, not the second part of the quote. And let me explain you how. Whenever we are receiving every month salary, pension, whatever, what do we do first? Immediately when salary is credited to our bank account, we start withdrawing money. Landlord's rent has to be paid, electricity bill, petrol bill, school education, whatever, we start spending. Yes, no?
Yes.
Yeah.
Yes.
And all mandatory ones.
All the mandatory expenses. Then, second, discretionary expenses now. Going hoteling, enjoying with friends, eating. If you do remember, all of us, during our good childhood days, how many times we used to go to eat in a hotel in a year along with our parents? Hardly 2 or max 3 times in a year. And as of now, thanks to Swiggy, Zomato. Even if you don't go outside,
True.
They will come inside.
yes, very well said, sir.
That was a very nice quote.
Yes.
That since people are not preparing food at home, company has prepared their income up to 3,500 crores.
That's
That is Swiggy and Zomato.
Exactly.
The company is now becoming 3,500 crores.
Exactly.
Since we are not preparing that food at home and not taking food at home.
Right.
Absolutely.
So our saving is earned by somebody else.
Exactly.
Absolutely.
So the two formulae I would like to inform you. If you want, you can note it down on your mobile also, like mobile notepad. Do not follow. Right now, do not follow. Do not follow. Below that you write. Do not follow. Below that you write. Income minus expenses. Income minus expenses is equal to savings. Do not follow. Income minus expenses is equal to savings. Do not follow. Income minus expenses is equal to savings. And predominantly 90 to 95% of the people are doing this, which we should not follow. As soon as we are receiving salary, suppose let us take a hypothetical example, 50,000 salary credit to our bank account, immediately we start spending, whatever mandatory, discretionary as the case may be. And what we say,
खत्म हो गया.
balance is not there, I will save in next month. Why this formula should not be followed is, suppose all of us are, God forbid, any of our family member falls ill, we have to incur unexpected medical expenditure. Then what will say? Okay, because of this unexpected medical expenditure in this month, I am unable to save money. I will save money in next month. Next month, some other thing will happen, and again we will say, I will save money in next month. So in this way, we are procrastinating our savings at the cost of our expenses, and our savings are dependent and at the mercy of our expenses, right? And that's why we should never ever follow this formula. Income minus expenses is equal to savings. So second part of the code specifies the formula, the golden formula for consistent savings. If you want to have consistent savings, follow the golden formula. Just note down. Follow below that, right? Income minus savings. Income minus savings is equal to expenses. Income minus savings is equal to expenses. Now, what is the beauty of this formula? Continuing with the same example, you have received 50,000 rupees salary. Immediately, 20% at least, if not more the better, but at least 20% transfer to another bank account. 50,000 into 20%, 10,000 rupees transfer to another bank account, and forget about this money. This is not your present money. This is not your today's money. This is your future money. This is not my present money. I have not earned. It is going to be received. Now try to adjust within that balance, 50,000 minus 10,000 transfer, 40,000 rupees. Try to adjust your expenditure, mandatory as well as discretionary expenses within that 40,000. I assure you, you can certainly adjust. And I need not tell, especially to women participants, whatever you receive for your household expenses from your spouse, from your father, within that also you save. That is it. At least Indian food. And where do you keep? where we used to keep, or mothers used to keep?
Shakar, sakkar ka dabba, chawal
चीनी का डब्बा, चावल का डब्बा, right, right. Now you will ask, how do you know? Since my childhood, I have been seeing my mother doing this. I have been observing this. So it is inbuilt within us. Only thing we need to practice. And if we follow this formula, there won't be any problem so far as our savings is concerned. Now, let me tell you some practical difficulties. Some of the people have been conducting this program for many different income group people also. Most of the time, some people who are having very less income, they are facing, sir, I'm saying 20%. We are unable to save even 5%. What you are saying? So to that also, I will give you a practical suggestion. Suppose you are at ground zero. You are unable to save right now. Okay. Irrespective of our income level, bare minimum at least 1% of income we can save. 10,000 rupees income is there. Out of that 10,000, 1%, 100 rupees you can save. That's for sure. Anybody can save.
Absolutely.
Irrespective of very meager income also. So 1%. You start with 1%. Second month, make it 2%. Gradually just raise the bar. Build it, let it take some time. And let it take 20 months. But at the end of 20th month, you can certainly be very comfortable saving this. This is practically very pragmatic. You will never find it in any book. This is a practical solution. So, depending upon our income, we can start off at 1%, 2%, we can increase by 2%. Even if you start with 2%, within 10 months you will be able to say 20%. Very practically relevant. So that we should be trying to do. Okay. That was the principle. Then, since our childhood we have been doing savings. We used to have good old days, piggy bank, and whoever elders used to give us, our mother, parent, aunts, any money they used to give, we used to put it in the piggy bank and we used to save it, a lot of money. And once that piggy bank used to be full, what we used to do? We used to break it up and use it for our specific goals. Right? Now, gone are those good childhood days. Today, just saving is not sufficient. Why? Alpamulyan, inflation.
Absolutely.
Inflation eats up our savings over time. How? Let us see. Because of inflation, what happens? The cost of goods and services increase, right? So cost of goods and services increase. The impact would be on our cost of living. So what does inflation do to your expenses? It increases expenses. Vyayam vardhayati. Our expenses increase. Now let us take an example. The impact of 5% annual inflation on expenses. Meager 5% on an average, more than 5% is there, but still, even if we take, for example, 5% of inflation, today, suppose our household expenses is 30,000 per month. Just within a span of 5 years, it will jump from 30,000 to 40,000. We are not incurring any additional expenditure. 2 chapatis, sabzi, same, everything. Our cost of our living is same, standard of living is same. But just because of inflation, 30,000 monthly expenditure will crop up to 40,000 just within span of 5 years. And within 15 years, it would be double. Can we just imagine? This is how inflation is going to take care of. And on one side, our income is not increasing by that rate. However, our expenditure are increasing at that rate. That is why we are unable to cope up with increased cost of living. So first impact of inflation is it increases our cost of living because of cost of expenses, goods as well as services being dropped. Second effect is on our savings. Inflation decreases savings. Vachatasya nyurikaranam karoti. It decreases our savings. Now, before explaining this example, let me just explain you with a very simple example. Suppose a book was costing 100 rupees 1 year back. Okay. Now after 1 year, considering 5% rate of inflation, today the cost of the book is 105 rupees. 5% extra, 5 rupees extra, 105. And today you go to the market with 100 rupees in your pocket to buy the book. Can you buy it? Why? Because today its price is 105.
Absolutely.
Right? You need to add 5 rupees extra. What does this signify? The purchasing power of 100 rupees has decreased over a period of 1 year because of inflation. The 100 rupees which were able to buy us the book 1 year back, the same 100 rupees cannot buy us the book today. We need to add 5 rupees. It means what? Even if you save 100 rupees, its purchasing power over a period of 1 year has reduced because of inflation. This is how inflation is decreasing our savings if we are just depending upon savings. Okay? What is
Absolutely.
another way? Suppose you are having 1 lakh rupees. You put it in a locker or tijori. After 1 year, you open the tijori or locker. Has the money increased?
No.
Did you receive any interest? Any dividend?
But
As
just
it is,
but just that, if there is gold, we feel good. Okay, now the gold price is increasing.
That is a good feel good factor.
Yeah.
But that is not with the cash.
Yeah.
So far as cash is concerned, after 1 year, we open the locker. 1 lakh rupees is there, but its purchasing power has reduced. Now you will be able to better understand this example. Suppose you are having 1 lakh rupees today. Because of 5% inflation, its value after 5 years would be, purchasing power would be reduced to 80,000. And over a period of 15 years, it would be just half.
So the erosion is very fast.
Yes. And that's why we cannot be dependent upon our savings, just keeping it in a locker. We need to utilize that money to convert the savings into investment. Only then we will be able to figure out and take care of this inflation. So what is the solution? Investing is the safeguard against inflation. Niveshaha eva samadhanam. Nivesha eva
Samadhanam.
So the solution for fighting against inflation is invest money. Don't just keep it in your pocket or in your locker or tijori. That is not going to help. In fact, it is going to deteriorate in its value because its purchasing power is going to reduce. Right? So start saving. Earlier you start, the better it is. And it is never too late. Earlier you start, the better it is, because you get more time for your investment to grow, and more time you get the investment to grow, the more and more benefit of compounding interest. You work, see, usually you work hard to earn money. By investing, make money work hard for you. When you invest money, money will be working hard for you. It will be growing on its own. Okay. We need to progress from saving to investing. We have been saving since our childhood, but just saving is not sufficient. Whatever savings are there, we need to convert those savings into our investment. Right? Benefit of from power of compounding. The more and more you invest and reinvest and keep on investing process, more and more benefit of compounding interest we get. The compounding interest concept, what we are seeing in our 9th standard mathematics. What the compounding interest says, interest received on principal as well as interest.
Yes.
That is what it is. So, if you have invested, suppose XYZ money, you have received some interest or dividend or whatever income from that, and again you have reinvested the principal as well as the income, and you are carrying on this cycle of investment, earning income, reinvesting. Certainly, during long-term period, you will be getting enormous amount of compounding benefit. That is what it is. And always put money to work rather than just accumulating and keeping it idle. Never keep money idle. That is the problem. And you need to progress from saving to investing. See, during our initial stage of our career, our income is less, salary or business profit, whatever, our income is less. Expenses are more or less equal. More or less equal. So we can call ourselves initially as spender. Because whatever we are earning, we are spending. Hardly there is any scope for saving. But gradually, as we learn, as our income increases, as we try to control our expenses, there starts coming up a gap. There starts coming up a gap between our income and our expenses. Income and expenses. This income and expense gap is in the form of savings. Right? So we convert from spender to saver. But just saving is not sufficient. As we have seen, saving would be eaten by inflation. So we need to convert our savings into investment. So only then we would be able to safeguard ourselves against inflation. Right?
Sir, one
Yes, sir.
minute. Now the last thing says, put money to work rather than accumulating or keeping it idle.
Right.
Now, when you invest also, you are not using it. Isn't it idle in one way?
On when you are investing, sir, you are getting some returns.
So that is also,
By keeping it in tijori or locker, we are not getting.
that's fine, that's fine.
Right, sir.
So when you say work, so investing also is work, right?
Investing is not a work, sir. The reason behind that, whatever income you receive, I'm going to come after this. Whatever income we earn on our investment, that is called as passive income. Okay? We are not actively working to earn the interest. You are having 1 lakh rupees. You have just made a deposit in the bank, and bank is paying you interest. Have you worked hard for it? So, another principle.
Sorry, before I go to this, sir.
Yes.
The inflation factor, you rightly addressed what is going to happen in the next 20 years. But many countries, they operate with such a low inflation. Let's take Japan versus India.
Right.
Our inflation continued to hover around 6 to 7 or 5 you have taken average.
Right.
So why that model of such a low inflation versus a high inflation like us? How do we handle this in a
Sir,
situation what you explained?
Honestly speaking, as you have mentioned, Japan, not for that matter.
I take one example of a country like Japan.
Correct. Or Brazil.
Yeah.
Brazil, it is increasing like anything.
Yeah.
So that depends upon the income level of the people staying in the country. Number two, their spending patterns. Spending patterns. These are the two determinant factors as such. Because in our country, as of now, at least till our age group, we have been operate saving. But the youngsters, they are having the Western
Thought
air is
process.
coming. Western air is coming. Wind is blowing. Western wind is blowing like anything. They are shifting towards more spending rather than saving. So because, as the case may be, so because of this, different rates would be there of inflation, and that is calculated by the economy advisory committee of that particular respective country. And for coming years for India also, it is around 5.5 to 6. That's been estimated. That is the case.
That's right.
That again, it is again subjective. When we are again trying to compare it with other countries, ups and downs are there.
We are still at a lower rate as compared to many other countries.
6%. So long as it is single digit, we are on 6%.
It's good.
So, next principle again Warren Buffett says, never depend on single income. Make investment to create a second source. Now all throughout our life, we are either doing job or business. If we are doing job, we are earning salary. If we are doing our business or profession, we are earning profits. We are actively working hard to earn that money, either salary or profit. Yes. So that is the first source of income. That is an active source of income. There are two types of sources of income. First, active source of income. Second, passive source of income. Active source of income means we are working hard to earn that money. We are doing as an employee, we are serving to the employer company or organization, and we are earning salary. And also if we are having our own business, we are conducting our own business activities, buying, selling goods or rendering of services, and we are earning profits out of that. So that is one single source of income. But what Warren Buffett says, do not be dependent on single source of income. Make investment to create a second source. And I don't know how many of you know at what age did Warren Buffett made his first investment?
I think it's around 11 or 12.
11 or 12. At the age of 11 years,
11,
he
11.
made
Yes.
his first investment, and that too he says, I was very late.
Very late.
God forbid, what we can say. We are in our 30s and 40s and we are still facing some issues. So what he says is, never be dependent on one single source of income. Then, importance of having passive income, I will just take you a couple of years back. Just 2020, 2021, COVID.
Absolutely.
How horrible situation was that? Many people lost their job.
Absolutely.
Many people didn't receive their salary.
Didn't receive.
They didn't receive the salary.
Absolutely.
Even if they received the salary, the amount of salary was far less as compared to the regular amount of salary.
25%.
Yes.
Yeah.
But during that particular period, did our expenses stop?
No.
Did our EMI stop?
In
At
fact, they
that
rose.
point of time, all of us felt a dire need that had we received another source of income, it would have been better, isn't it?
Absolutely.
That is the importance of having passive source of income. So active source of income, if you are doing job, you are receiving salary. If you are doing your own business or profession, you are earning profits. That is example of active source of income. Passive source of income, whatever money suppose you are having, you are investing the money in either bank or stocks or mutual funds or property or gold or whatever, and you are earning some income as such. That income received on your investment will be treated as passive. Suppose you are having 1 lakh rupees, you have invested that money into bank as a deposit. Bank is paying you interest. This interest received is a passive. You have not worked hard for it. That is what he is trying to signify. That whatever you are earning out of your regular incomes, active income, try to first save money, convert it into investment, and generate another source of income as such in the form of passive. We are having different life events. Okay, we are single. Get married, things are changing. We conceive a child, things are changing. Child grows up, things are changing. Child marriage, things are changing. Child higher education, things are changing. Our retirement, things are changing. So various life events are there. We need to plan for all life events. And how we plan is through this process, 6-step process. First step is, first and foremost thing, establish your financial goals. You take human beings, any goals, 99.99% goals, we can convert our goals into or measure in terms of money. For example, I want to buy a house or construct a house. Question comes, how much? 50 lakhs, 1 crore, 10 crore. I want to buy a car. Question comes, how much worth of car? 5 lakhs, 15 lakhs, 50 lakhs. Right? I want to go for a trip along with my family. How much you want to spend? 50,000, 1 lakh, 2 lakh, 5 lakh. Take most of the goals. I want to make my child doctor. Things are different. I want to make my child an engineer. Things are different. How many of you know what is the cost of medical cost? Just MBBS is not sufficient today.
Absolutely.
Yes. PG is required. Post graduation is required. And page, just bottom of the link, it was published in Times of India. It was very shocking. In a college in Chennai, okay, they were selling the seats. Students come along with your parents. Okay, this person is going to pay 7 crores. How much will you pay? 7.5. Okay, seat given. This is what the business is happening.
The auction of seats, huh?
Auctions. And even if you find no medical profession, if you want to make your child as an engineer from premium institute, that's what this is. Surplus, how much I'm falling short of, how I can bridge this gap over how many years. Likewise, then once you have prepared the plan, start implementing, start saving accordingly, start investing accordingly, and that is not sufficient. Continuously you need to monitor, because at any given point of time, life events, anything happens, we need to continuously monitor whether we are on track of achieving our goals. This is what the 6-step financial planning process we have to follow. Then, always determine what you are investing for. Many people are not determining why I am investing. Just accept. Tom said, okay. Dick said, Harry said, or there's any Tom, Dick and Harry said, okay. As we used to have in our college days, after 10th standard, okay, my friend is going to take science, I will also take science. Are you competent? Do you really want to do?
Absolutely.
Determine exactly what you are investing for. So, that is the importance of goal-based investing. Lakshya Adharita Nivesha. Lakshya Adharita Nivesha is very, very important. What are your goals? Every person's goals are different. Already, if you are having your own house, in your goals list, that won't be there. No? But if a person who is staying in his rented premises, that fellow will be spending a lot of money for his house, but buying or constructing house. Every person stays are different. So these are the various life goals. You want to buy a house, higher education, retirement, family trip, car, you need to take care of your family. For what purpose you are investing, the purpose should be very clear. Let me give you a simple example. Suppose every month you are buying a little amount of gold, small amount of gold every month. You can specify that this gold I am going to use for my child's marriage and not for this. So you have linked this investment for that particular purpose. That is
Absolutely.
and the most astonishing thing I will tell you, I will reveal you, many people do. Whatever cost of marriage is there, it might be bride or groom's. Okay, whatever cost of marriage comes, equal cost of gold is there. Suppose 5 lakh cost is there of cost of marriage, 5 lakh gold you are putting. So, many people never wonder. Okay, so if you want to plan for child's marriage, 1 plus 1, 2 grams. First to cover the cost of marriage, second to cover the cost of jewelry. Done. या तो बहू या फिर दामाद. So, right? Makes sense? Right. So you're always investing assets with your specific financial goal in mind. Why you are investing? With this money, what you are going to use. Then, what are the various investing options? During our parents' times or grandparents' times, where they used to invest predominantly bank fixed deposits. And how they used to invest? They used to invest in Dam Duppat Yojana. Means it should be double. Money should be getting double. Suppose they are investing 1 lakh rupees. They didn't used to touch that money
For 5 years.
1.5 years, 6 years, whatever it let it take. Let it convert into 2 lakhs. And once they receive 2 lakhs, again they used to reinvest 2 lakhs until it became 4 lakhs. This is how simply they have built their wealth.
Absolutely.
Without any financial knowledge. But things are changing. We are having different options. So many options are there. Bank deposits, insurance. Some insurance products are there. Property, mutual funds, gold, stocks, bonds. Now, if you today say that I will also follow my parents' rules of investing in bank deposits, you won't be able to do it. Why? During our parents' times, the rate of interest was double digit. Very high rate of interest on deposit was there. That's why they were able to pay, because 12%, 14% rate of interest was there on deposit, and 5 to 6% inflation was there. So the gap between inflation and the rate of return was such that they used to fight inflation and still they used to build well. Today, 7%, 8%.
Yes.
They are getting interest.
True.
4 to 5, 6%.
If you go for a specific cooperative bank, 7%, 8%, okay, and more or less inflation rate is there.
You
So
missed out on one thing.
Yes, sir.
Taxes.
Taxes, that is what we are
After tax, you
different.
don't get that much also.
That's what. So if you carefully see, we are unable to fight against inflation, and that's why we go to look after another investing options. Okay. So make your investments work for you. How you can make your investments work for you? Because looking back, just now we have seen we need to fight against inflation, and investing is the key to fight against inflation. So first, your investment should fight inflation for you. Fight inflation for you means what? The rate of return which we are going to receive on our investment should be greater than the inflation rate. 5% rate of inflation is there, and if we are getting 4% rate of return, that doesn't make any sense. Right? First. Second, it should provide income when you need it. That is very important. Especially pensioners. We cannot say that early age people can say, I can invest and I can, no need, I don't want to look at it for next 5 years, 10 years. I am not dependent on the money. But that is not the case of age-old people. And a misconception or myth is there that bank deposit would be always for 5 years, 5.5 years, 6 years. No. You can give standing instruction to the bank saying that I want quarterly rate of interest, quarterly interest billed to bank gives. Monthly rate interest also bank gives. So that is also important, that it should provide income when you need it. Whether you receive it monthly, require monthly, quarterly, or half-yearly, or annually. Then your income should be accessible and usable in parts. If you want to buy property, can you say to the builder, I am having 10,000 rupees, I will every month pay 10,000 rupees? Builder will not say yes. Isn't it? But so far as shares are concerned, mutual funds are concerned, depending upon your investment capacity, you can divide it into small portions and invest as per your capacity. So it should be accessible and usable in parts. That also feature has to be considered. Then it should grow in value and appreciate over time. Traditionally, of late, what we have been investing in property. Why? Because we know over a long-term period of time, property rates will increase and that will be giving growth to our principal. But of late, stocks are also there, shares are there, mutual funds are there, growth-oriented mutual funds are also there. They are already liquid, highly liquid. Liquidity concept is what? Can you convert your investment into cash effortlessly, easily, at low cost? If it is yes, then your investment is liquid. The best example, highly liquid asset is gold. You take gold and give it to any particular person overnight, you can immediately get cash at his time. Gold is highly liquid. But as against that, consider property. You are having a plot of land or a building or a shop, you want to sell it. Can you sell it overnight?
No.
You have to wait for the proper buyer who will pay you proper price, fair price. If you show that you are in desperate need of money, the person will be negotiating in such a way that he would be paying you less than the market value.
Absolutely.
So that liquidity also has to be considered. So proper asset allocation is the answer. Whenever we are investing, these factors we need to consider, and then we need to prepare our portfolio research. Asset allocation, sampatti viniyoga. It is nothing but asset allocation is just like a balance.
Absolutely.
Okay.
Wonderful.
See, whenever we go to any restaurant to eat, we are having two options. First option is we can order paneer tikka masala with naan or butter roti. It will cost in and around 350-400 rupees. Another option is thali, 175-180 rupees, 200 rupees max to max. Which is better? From nutrition point of view, thali is better. From variety point of view, thali is better. From cost point of view, thali is better. From health point of view, thali is better. How many things are there in thali? 2 sabzis, dal, rice, roti, pickle, papad, sweet, curd. So many things are there.
But the reality is different. What we eat at home, people don't eat at hotel.
That's what it is.
That's the big difference.
That's what it is. So try to correlate this is what is this asset allocation means, this principle says is you cannot say that just because stock market is going up, I will invest entire money in stock market. Wrong principle. Or just because property rates are increasing, I will invest entire money in property. Wrong. You need to diversify. You need to create proper blend. This will be dependent upon two things. How much is your risk bearing capacity and how much returns you are trying to expect to earn out of it. Differs from person to person. Mr. X would be willing to and able to take higher risk because he is having sufficient corpus along with his. Even if he 10 lakh rupees is lost, he is not bothered. But another Mr. Y, he is not having backup. Small.
There is a tested and proven strategy on the risk strategy. So what is the proper asset allocation or whatever the Thali strategy you mentioned? Is there a tested and proven to for a common person like me or it of course
Yes.
tested in the age group. Say particular strategy which is the proven and tested.
I am going to explain to generate income. Now as we have said sir, suppose higher age group people nearing to the retirement or just recently retired, they want or they are in need of constant
Cash flow.
regular income. This category. So for that purpose, you can invest in bonds. Bonds will pay you interest. National Savings Certificate, Kisan Vikas Patra, Public Provident Fund, Bank of Corporate Deposits, and also debt mutual funds, which are paying you some regular source of income. As against early stage people, youngsters, their needs would be to grow money. because they are having lot of time to grow their money. They are not dependent on the regular income because they are having salary income and all those stuff. And then that money is pooled and collected by the fund manager, investing in that respect to avenues as per the mutual fund scheme. Over a period of time, that investment generates income. After deducting some fees of mutual fund managers, rest is distributed amongst them. Being very high, but of late it has reduced considerably. So the cost is less. Second, convenience. You can invest in small amounts, 500,000 rupees as per your capacity. You can invest. So the equity shares of the companies, highly risky, right? Highly risky equity shares. So it invests in equities and equity-related instruments of companies. Then it is better for people who are seeking long-term growth but volatile in short-term risk. If you want to invest in equity mutual funds, you need to be sure that you are going to stay invested for long term.
And decade and leave it, or when it is going up and down, you keep churning also, so
Yes.
that you take advantage of the returns and
Yes.
then go back to it.
So in that way, sir, what I can suggest you is some people do short-term profit booking.
Short term means, say after 2 years or 3 years, you see market going up, your mutual fund price.
You are in between your mid-career. You are not again just heading towards your retirement. In between, you are willing to take risk, but not as much as you used to take earlier, because you have shifted in the middle age, right? So for that, hybrid scheme would be more suitable. That is the eighth wonder of the world. Albert Einstein had said that compounding is the eighth wonder of the world. How? See the figures and then your eyes will be wide open. Suppose you start SIP of just 1,000 per month. Small amount, 1,000, gettable per month, 8% modest return. We are not expecting higher 2 digit also. 8% rate of return and until the age of your 60 retirement age. Suppose you started when you are at the age of 25 years. The principal amount would be 4,20,000. 25 to 60, 35 years into 1,000 into 12, 4,20,000. And compound rate, its value would be how much?
23 lakhs.
Just invested 4,20,000 and you are going to get 23 lakhs. Suppose you started off 5 years later at the age of 30. So your investment also reduced 3,60,000. Return money 15 lakhs. See the difference. 23 lakhs, 15 lakhs. 8 lakhs rupees wiped out just by starting 5 years later. Suppose again you started off more later at 35 age, 3 lakh rupees invested, you will be getting 9,57,000. Again at the age of 40 years started, 2,40,000 investment will go up to 5,90,000.
How
What
does
this table shows?
Sir, how does this total amount invested reduce?
Total amount? Sir, at the age of 25,